What up YouTube? So today I'm going to be talking to you guys about a stock. I'm going to be talking to you guys about GHIV, which is a Spaq stock. This was mentioned to me by one of my subscribers. They wanted a video on this, so here's the video. I'll also be talking to you guys about APXT, which is another Spaq stock that one of my subscribers requested for. I will be dropping this video. I should be on Tuesday, so tomorrow. I'm currently recording this video at 4 o'clock, so at 4 in the morning, so the price is at 10.72. So after tomorrow, once you guys are watching this, the price will definitely change. In regards to stocks, if you guys do have any requests, any videos you guys want me to do, whether you guys want to know information about the company, if you guys want a stock analysis or a prediction on what I believe the stock price will go up to or down to, you could definitely leave a comment and I will definitely do a video on that. Also, please, if you could like and subscribe for more videos. So for everything I've called out in this channel has been correct. I've called out about IPOC, and I've since the call we've made about 30 to 40% return on the option calls. I've done the same thing for FSR, and we've made a pretty good return on FSR. I believe it was like 20-30% as well, and on their option calls. And as well, I've done calls on I've made a call out on DoorDash to not purchase it and that the stock would go down, and as you can see, DoorDash has been going down. So today I'm going to be talking to you guys about GHIV. They are the biggest Spaq company at 1.6 billion. They're the biggest Spaq company ever in terms of SPACs. So in terms of the chart, it's sitting at 1074. As you can see, the MACD, the blue, is looking to start creeping up and crossing over the yellow, and as you can see here, the RSI is pretty low. So this would determine that it is, according to technical analysis, it is a good time to buy, as it's going to start slowly creeping back up, but it's currently not a strong buy. As you can see here, it's currently a buy. And not a strong buy because the cross hasn't happened yet, and there's no indication of it flying up, but it does show that it's preparing to start going up. So in regards to that, we're going to be talking about the stock analysis. I will be having a timestamp on everything, so if you guys want to skip, you can skip that. I'll be talking to you guys about the company. I'm going to be comparing it to their competitor Rocket. I will also be telling you guys about my stock prediction, and as well as what option play that is looking interesting for me in order to make a return, and the possible returns we can make on the call options. So to start off with, this is the CEO, Matt Ishbia. Every great company has a great CEO, and I really like him. After I watched his presentation and the way he was talking, it's a 35-minute video on their website. You just go onto their video to the website and you'll see their video presentation. So currently this company is valued at 16.1 billion if you purchase GHIV at $10. They will be having an annual dividend of 40 cents. Their meeting to do the vote is set on January 20th, and they will be voting on the company. They originally had it for December, but it got pushed back, and that caused the stock to drop. And the reason why they pushed it back is because they said that there's not enough hype. Everyone's busy with Christmas and everything like that. So what they wanted to do is they wanted to push it back for January, so then everyone would be able to vote and aren't going to be occupied with family and stuff like that. So it's natural that after the vote you will definitely see the stock go up, which right now is a pretty good time to buy at these levels. So this company right now is the number one wholesale company and the number two in terms of mortgages as a whole, which number one is Rocket. As you can see right here, Rocket company, they had a crazy earning report which brought their company up to 28.42 and at a high of 34.42. and their market cap is 42 billion. You can say 43 billion at $21. So the company's worth about 43 billion, and these guys are number two. To understand how big United wholesale mortgage is. If you take the top 5 competitors behind them and you put them all into one big company, United Wholesale Mortgage would still be bigger than all of that put together. So what I want to mention as well is their NPS score. So they have an NPS score of 86, so it's like a net promoter score. It's basically to say how good the company is. And 86 is an amazing score. So if you want to compare this right now, let me go back. So an NPS score of Amazon is at 69. This is a little bit old. I believe this might be like a year or 2 years old. But anything above 0 is considered good. Anything above 50 is classified as excellent. Anything above 70 is considered world class. So as you can see right here, NPS score, this is a couple of years old, so the numbers probably has changed in their favors, but Apple had an NPS score of 63, Amazon is 62, and Netflix of 77, whereas these guys have a score of 86. That means that a lot of people trust these guys. And what I like about these guys is when they give out mortgages, they only give it to low risk credit people. So they're not going to lend it like Rocket, where they're going to lend to anyone with good credit score, bad credit score. It doesn't matter. They'll find a way to lend you money. These guys will only lend to the best of the best, which would mean that their business is a lot more safer versus Rocket, etc. So one important thing about the CEO is he likes culture in the company. He believes that everyone needs to work as a team. They kind of turned their work area, I think it's like 1 point something acres. They turned it into a whole like kind of like a university campus where you have like Google. Basically you could have lunch there. They have like a Starbucks there. They have basketball courts. They have arcades. They have so many things and so many activities. He wants everyone to be able to feel comfortable going to work and having fun at work. And for Christmas, he actually gave a lot of his employees some brand new Cadillacs. But that's just kind of who the company, who the CEO is, and how much he values the company and his employees. So what I like about these guys is that they want to find the cheapest, they want to be the cheapest interest rate in terms of mortgage. They want to be able to give the mortgages the fastest, so close the mortgages the fastest and the easiest. So they have some good technology and services in order to provide it to the mortgage brokers to be able to provide the clientele their mortgage, which would make it a lot faster. So in terms of closing date, their average closing date is within 17 days, whereas the rest of the industry on average is 47. And they have the cheapest interest rates. So their retail interest rate's 3.13, whereas they offer 2.83. So as you can tell right now that their interest rate is a lot lower than most banks and most retail investors. So I want to go ahead and head over to here. If you guys want to read this in details, it's on their website. I could put a link in the description as well, so you guys could click on it and read everything, but I'm just kind of going over the more important things. So Rocket's closing is 29 days, whereas theirs 17. So as you can see, they're more efficient and faster closing times. And then I want to go ahead and scroll down to here. So one thing I like about this company is that they mentioned about wholesaling, and they mentioned how they want to be doing only wholesaling to brokers, and they want to be able to provide the best rates to the brokers at all time, all year around, and they're not cyclical. So example, right now the rates are really low. Everyone's doing refinance, everyone's getting their loans refinanced. So mortgage companies are doing really good numbers like Rocket. But once the interest rates start going up, not many people are going to be doing refinance. So the company Rocket that does a lot of refinancing won't have much refinancing to do later on, so they're more cyclical. Whereas these guys are all year round because they don't do only refinance. They don't focus on refinance. They focus on giving more and more mortgages and attracting as many people as possible. So as you can see here, the blue is the market average, and the light blue or green is how big and how fast United Mortgage has been growing, and this is what they predict by 2025 they'll be doing. So as you can see though, in 2018 they passed the market, 2019 they beat the market, and same thing as 2020 up to date. So another thing I want to mention about is that they help and target brokers. So brokers go and find their own business, and they make sure that they provide the best rates in order to keep growing their books with their brokers, and the brokers are going to keep referring their clients over to United Mortgages. So next thing I want to talk to you guys about is down here. I will be mentioning, so as you can see here, they had over 1.834 billion dollars in terms of net revenue. So as you can see, they're doing some crazy numbers, and annualized they're looking at 7.3 billion dollars. That's as of right now. Obviously later on with COVID, the numbers are going to be dropping and all the mortgage companies are going to be going down, but they do plan on growing still to 4.6 and 5.3 billion. So that's for that. And sorry, that 1.8 billion is just third quarter only. This is only in 3 months, so you could only imagine what the whole year is going to be looking like. So next thing I want to mention in terms of United Wholesale Mortgage is their cost. So they do provide much lower cost than other wholesale companies and retails because they invested in their technology. They do work with brokers, and they don't have any retail offices, so that definitely lowers their cost and improves their margins, because the third parties, aka their brokers, are going to be the ones taking care of that. And as you can see right here, their annual growth compared to the rest of the market is insane. So 2016, this is the growth within the companies in terms of how much they're purchasing for the mortgages. Next thing I want to talk to you guys about is their financials. It's all the way right here at the bottom, and I'll be comparing this to Rockets. So as you can see right here, their net income as of 2020 so far is not including September, not including November, October, November, and December. So this is including September, and before they had a net income of 1.45 billion. And in terms of Rocket, they're at 2.408 billion. So what I did is I did some quick math to look at if I were to compare just their earnings, and if I had to compare their earnings towards their stock price. So what I did is I took Rockets is 2.408 billion. I divided that by 1.45 billion, which gave me 1.6595. I multiplied that by the 16.1 billion market cap of GHIV, or United Wholesale Mortgage, sorry, and that gave me an estimate of $26.71 billion. So that's still lower than Rocket Company, obviously, because their number's 2 behind them, so it does make sense. This means that it would give me a fair valuation of $16.59 to $17. And if you wanted to compare, and this is as of today's price, but if you wanted to compare it to the high end of 28, that would bring me to $21 to $22. So obviously GHIV would be sitting at 17 to 21 billion $17 to 21 dollars per share. So that would be a fair valuation between $16.50 to $21 would be a fair valuation of GHIV going by their numbers. So with that being said, what I want to do is I want to look at the call option. So I've selected the 19th of March 2021. Obviously you could select an earlier date. I wouldn't select January the 15th because the vote date isn't until after, so it's a lot more riskier. You can if you want, it's a lot more riskier, but definitely after the vote date is when the price will go up, and then when the merger happens it'll go up even more. I would recommend to select 19th or 19th of March or the 21st of May. This would cause the prices to go a lot higher in terms of the options, but it's a lot more safer. So I've selected the $10 call at $2.75 if I purchase 13 contracts, and I said that the price will go $10, so it's the lowest it could possibly go with a Spaq stock, and we said it was an estimate of 21 would be fair value. I'm just going to put 22. So if I were to calculate my profits, let's say they had the vote on the 22nd and the stock price started going up, and starting from February. So I'm just going to take the first week of February when I do plan on selling. Just by it hitting $13, which is barely any movement and is very unrealistic because we had a price target of $16.50 to $21. So at 13, if I'm completely off and the market for some reason is bad, you're looking at a 36.7% return. Okay, now if we were to go on the low end of 1650, let's just say 1667, you're making 153%. So you're going to be making about 153 to 164%. If let's say it does end up hitting the $20 mark or the $21 mark, I could end up almost tripling my money. If it's the $21 mark, I triple my money. And even let's say it hits the $21 at the end of expiry, so at March, I'm looking at 3 times my money. So I'll be making $10,725 just for investing $3,575. And obviously if there's more demand and more people start buying into it, this price will skyrocket. So that is currently my play. If you like this video and enjoyed, please leave a like, subscribe, and comment down if you have any questions, or if you have any requests. I'll definitely do a video for you guys.